Both Nvidia and AMD are on fire right now. They're powering the AI revolution, dominating data centers and printing billions in revenue. And I've been tracking both of these companies for years, through earnings calls, product launches, and insider activity. But here's the real question: which one hits $400 first? Because while both stocks look like strong bets, only one is going to lead the next leg of this AI bull run. And if you make the right call now, the upside could be life-changing. In this video, I'm going to break down Nvidia and AMD side by side, their strengths, strategies, risks, and roadmaps. So by the end, you'll know exactly which stock is the better bet right now. And the price targets might just shock you. Let's get into it. You can think of Nvidia and AMD like this. Nvidia is the luxury skyscraper, designed from the ground up, custom built with its own elevators, plumbing, and security systems. Everything is vertically integrated. It's powerful, efficient, and expensive, but you're locked into how it's built. AMD is the modular construction system. Think prefab buildings that snap together faster, cheaper, and can scale across multiple environments. It's not as flashy, but it's flexible, and when demand surges, it can move faster. Nvidia controls the stack, AMD adapts to the landscape, and in the middle of this AI construction boom, the question is, do you bet on the polished tower or the system that can build an entire city? First, let's take a deeper look at the polished tower, Nvidia. Let's talk about Nvidia. They started out as a gaming company, GPUs for high-end graphics, PC enthusiasts, all that. But everything changed when they launched CUDA, their own proprietary software platform that let developers build AI models specifically optimized for Nvidia chips. That one move turned Nvidia from a chip company into a platform, and today, CUDA is so baked into AI development that it's basically the default. If you're training anything serious, from GPT-style models to enterprise vision systems, you're probably using Nvidia. But it's not just about the hardware anymore. Nvidia owns the entire stack: chips, software, networking, and now even pre-trained models. With their new NIM platform, it's vertical integration at a scale that almost no one else can match. Financially, they're a beast. They pulled in over $26 billion in revenue just in Q1, with gross margins over 78%. As of mid-May 2025, Nvidia is trading around $134 with a forward PE ratio near 43. So yeah, it's expensive, but the market still believes the growth story isn't over. And then there's the Saudi deal. Nvidia just signed a massive agreement to supply over 18,000 Blackwell GB 300 chips to Humane, an AI startup backed by Saudi Arabia's sovereign wealth fund. These chips will power a 500 megawatt data center, one of the biggest AI builds in the world. And it doesn't stop there. They're expected to deliver hundreds of thousands more chips to Saudi Arabia over the next 5 years. This isn't just a one-off, it's a foothold in the Middle East's AI infrastructure push. And back in the US, demand's just as strong. Meta is reportedly buying around 350,000 of Nvidia's H100s to train Llama 3 and beyond. Amazon is spending over $100 billion this year in CapEx, with a huge chunk going to AI infrastructure using Nvidia GPUs. Google, Apple, same story. In total, tech giants are expected to drop $320 billion on AI and data centers this year, up from $230 billion in 2024. And Nvidia is still the preferred vendor, but here's the part most people miss. Nvidia is not just about AI training anymore. They're expanding into robotics, autonomous vehicles, and full-blown digital twin platforms with Omniverse and Isaac Sim. They're already rolling out Blackwell, and Rubin's coming next year, with Feynman right behind that. So what could go wrong? Well, margins might compress, especially if hyperscalers like Microsoft and Amazon get serious about replacing Nvidia with their own chips, and regulatory pressure is heating up, particularly around antitrust and China export controls. But still, this is Nvidia. They're not just selling chips, they're selling the infrastructure behind the AI arms race. Now let's talk AMD. A decade ago, this company was on the ropes, but under Lisa Su's leadership, AMD has staged one of the greatest comebacks in tech history. Their pivot from consumer CPUs to data center dominance is impressive on its own. But their recent push into AI is what makes them so compelling today. While Nvidia has CUDA, AMD is betting on something different: flexibility. Their chiplet architecture allows them to produce high-performance GPUs faster and cheaper than anyone else. And they're already shipping their MI300X chips to hyperscalers like Meta, Microsoft, and Oracle. MI350 is next. Even more interesting, AMD is developing a software layer that could completely break Nvidia's moat. They filed a patent for a dynamic instruction layer, essentially a translator that allows Nvidia optimized code to run on AMD hardware. If that works, the developer lock-in Nvidia enjoys right now could disappear. Now let's talk numbers. AMD's annual revenue is just under $26 billion. Back in 2021, their data center revenue was $800 million. As of Q4 2024, that number has jumped to $3.9 billion, and it's still climbing. Their gross margins are in the mid-40s right now and improving. And their stock is trading at around $117 today, with a market cap of about $190 billion. Their stock is even more expensive than Nvidia, with a PE ratio of 86. AMD's stock also has experienced a notable increase recently, partly due to the announcement of a new $6 billion share repurchase program, which expands the company's total authorized repurchases to approximately $10 billion. Also worth noting, Amazon recently invested over $84 million in AMD stock. That's not retail speculation, that's a long-term vote of confidence. As for risks, AMD still doesn't have the brand recognition in AI that Nvidia does. Their ecosystem is younger, and there's always execution risk when scaling up GPU production. Plus, while they're building CUDA compatibility, they haven't broken that moat yet. But if they do, everything changes. So how do they really stack up? Let's break it down across 5 key areas: growth, margins, moats, risks, and speculative upside. First, let's go over growth trajectory. Nvidia is already a giant, over $3 trillion in market cap, $26 billion in quarterly revenue, and some of the strongest guidance on Wall Street. They're not doubling anytime soon, but they don't need to. Their growth is steady, diversified, and global. They're not just in AI chips anymore. They're building the software, the cloud stack, even the industrial metaverse. AMD, meanwhile, is still in its early innings moment, at least in AI. Their data center revenue has jumped nearly 5 times since 2021, and they're gaining ground with every MI300 shipment. Because they're starting from a smaller base, their percentage growth could outpace Nvidia in the short term, if they keep executing. So, Nvidia is the freight train, AMD's the race car, still picking up speed. Next up is margins. Nvidia's margins are elite, over 78% gross margins. That's Apple level profitability in the chip business. Why? Because they own the stack, they control the ecosystem, and right now demand far exceeds supply. AMD's margins are good, but not there yet. Mid-40s today, improving fast thanks to their chiplet efficiency and growing data center volume. If they hit scale on MI350 and break into inference workloads, we could see those margins climb closer to 50%. Short term, Nvidia wins. Long term, AMD has room to catch up. Number 3 is moats. Nvidia's moat is legendary. CUDA, software libraries, integrations, frameworks. It's a full-blown platform. It's not just about silicon anymore, it's lock-in. And it's why most AI researchers still default to Nvidia. AMD's moat is emerging. Their chiplet architecture is a huge advantage in terms of speed, cost, and customization. And their recent patent for a CUDA-compatible instruction layer, if that works, it could punch a hole straight through Nvidia's moat. So right now, Nvidia has the better defense, but AMD might be building the better offense. Next up is risks. For Nvidia, the biggest threat is disruption from within. Amazon, Google, Microsoft, they're all building their own chips. If those efforts scale, Nvidia could lose some of its biggest customers. Add in potential regulation and geopolitical risk with China, and the path isn't risk-free. For AMD, the risk is all about execution. They don't have time to fumble. They need to ramp MI350 fast, scale their software stack, and prove they can win market share outside of just the hyperscaler contracts. Nvidia's risk is complacency, AMD's risk is not moving fast enough. Lastly, speculative upside. This one's not close. If Nvidia stays dominant, the upside is solid, but not shocking. You'll likely get strong returns, but the next 5x, probably not happening from here. But AMD, if that software layer works, if they turn CUDA into a universal language and remove friction, suddenly every developer, every AI startup, every enterprise has a reason to switch. And if AMD becomes the flexible, affordable, scalable alternative in the AI world, we're not just talking about a $400 stock, we're talking about a whole new narrative. So who wins? Right now, Nvidia is the king, but AMD might be the rebellion. So which one hits $400 first? All right, let's break this down. Because hitting $400 per share isn't just a number. It's a reflection of how much money these companies need to be making and how much the market believes they're worth. Let's start with Nvidia. Right now, Nvidia trades at around $134 per share with a market cap over $3.2 trillion. That makes it the second most valuable public company in the US, right behind Microsoft. To hit $400 per share, Nvidia's market cap would need to rise to just under $10 trillion. Now, before you say that's impossible, consider this. If Nvidia continues posting 25 to 30% annual revenue growth and maintains margins near 75%, they could be doing $250 to $300 billion in annual revenue within the next 5 to 6 years. And at current margins, that could mean $150 billion in annual net income. That kind of scale would absolutely support a multi-trillion-dollar valuation, especially if Nvidia becomes a foundational layer for global AI infrastructure. So yes, Nvidia could hit $400 in 2 to 3 years if AI spending keeps accelerating, but to sustain that price, they'll need to keep dominating every layer of the AI stack: chips, software, cloud services, robotics, and enterprise simulation. Now let's talk AMD. AMD is currently trading at around $117 per share, with a market cap of roughly $190 billion. For AMD to hit $400 per share, its market cap would need to grow to about $650 billion. That's more than a 3x increase. To justify that kind of valuation, AMD would likely need to be generating $80 to $100 billion in annual revenue, up from $25.8 billion today. And assuming they can scale their margins from the current mid 40% range to something closer to 55 to 60%, we're talking $25 to $30 billion in annual net income. So what would have to happen? MI300 and MI350 need to gain serious traction in AI training and inference. Their software layer has to work and attract actual developer adoption. And AMD needs to keep winning hyperscaler and government contracts, while expanding into edge computing and enterprise AI. That's a tall order, but not impossible. And here's the key difference. Nvidia needs to maintain dominance to get to $400. AMD just needs to prove it can catch up. Nvidia's price reflects perfection. AMD's price reflects doubt. So if AMD executes, surprises the market, and even slightly breaks Nvidia's moat, the upside is way bigger from here. So here's the final takeaway. Nvidia is the current king. It's further ahead, more dominant, and it probably gets to $400 first. But the upside from there, slower, more steady, more priced in. AMD is the underdog. It's leaner, faster, hungrier, and it doesn't need to win the whole market. It just needs to keep proving the market wrong, one step at a time. If they do that, this stock won't just hit $400, it could blow past it. If you made it this far, let me know your pick in the comments. Thanks for watching, and I'll see you in the next one.